Good morning, folks. I had a subscriber ask me about Tesla, and so in response, I thought I would show you how I would do technical analysis on Tesla. And so that's what this video is about, technical analysis on Tesla. And here we are looking at a monthly chart, and my first reaction is, what the heck am I supposed to do with that? That's a pogo stick. It's a straight stick pointing at the sky. But then my second thought, after I get over my initial reaction, is, well, I noticed these two red price bars there in what looks like, just eyeballing it, that could be the middle of that move. And so I know just based on experience, potentially the Fibonacci extension tool may be useful when I see an impulsive price movement followed by a correction. And so the Fibonacci extension, it's based on, or it helps us with the idea of an ongoing bull market or an ongoing upward price movement. And now we're looking at a pullback in that movement, and we want to project or predict where the ultimate end of the move might be. And so let's add the Fibonacci extension to our chart here, and notice, if you notice, this is subtle, and so notice that I picked that spike low. As I explain in my book, these spikes they mark places where buyers and sellers did battle. There was a great deal of energy expended in this market to create that lower tail right there. That's buyers and sellers duking it out, And so anyway, when we are applying tools to our charts, we will get better accuracy by using significant pivot points. If you're trying to, okay, which of these pivot points am I going to pick for the first pivot of my tool? There it is. I'm suggesting go for the tail, or the upper tail whisker. There's our first pivot. Obvious that the top of the upward move, that's our second pivot, and then the third pivot here, this is the bottom of our pullback. And so now what the Fibonacci extension gives us is a projection. See, we could have applied this tool soon as we saw, we could have waited for that bar to close. As soon as we saw this first bar close, the red bar candle, we could have applied this tool and been looking at these projections for the next, 5 months? And so there's a one-for-one move. And so clearly Tesla has penetrated the one-for-one move. And so what that could suggest is that it's headed for the next Fibonacci target, which is 1.618, 162, which would give us 1025. And so just, there's a data point for us to consider, is that in the monthly chart with Fibonacci extension, we've got a target at 1025 potentially. And that's about all I know to do with the monthly chart. I mean, we can take a quick look at some of the indicators. Yeah, volume doesn't help us, so let's get it off our chart. There's, accumulation distribution. This indicates that clearly investors are accumulating the stock, which, based on that price action, we didn't really need to look at the indicator. MACD's not a lot of help. So, with these big dramatic price moves, MACD, yep, it's headed up. And that's about all it can tell us. And stochastics, well, obviously energy is extremely elevated. But again, we knew that already. Tesla's an obvious market favorite, momentum stock right now. And so we didn't need to look at the indicator to know that energy was elevated. So anyway, so that's the monthly, and let's keep rolling here. And so now when we get down to the weekly time frame, we get a little bit more market structure to work with. And so we've got some more possibilities to play with. And of course, my favorite, my go-to tool is Andrew's Pitchfork. And so that's always where I'm going to start in a chart. So I'm looking at this chart and I'm seeing two things that really stick out to me. And sometimes, just throwing a couple of lines on a chart can make all the difference in making the price action clear. And so anyway, that pennant, flag, whatever you want to call it, that caught my eye. But we were talking about Andrew's pitchforks, and so let's draw one. Or let me explain first what catches my eye in this chart and in any chart. It's that action right there. After drawing thousands of pitchforks, I've been, I guess going on 2 decades now, drawing a lot of pitchforks. What catches my eye is movement like that. It's the pullback. It's not the upward movement. It's the pullback that catches my eye. I point that out from time to time, and I wanted to share that with the individual who had asked about Tesla. So let's throw an Andrew's pitchfork on this chart. I'm just going to draw that. And because again, the most obvious pivot points to use are spikes. And so there's a spike high, there's a spike low. Not as obvious when we get down to the, trying to identify, let's do that a little bit more. I kind of like trying to find the best pivot point down here, although now that I've expanded the chart, and of course we only had to do that because the price action's been so dramatic. Once I've expanded the chart, it becomes obvious. There's my spike low. And so I'm gonna use that as the origin of this fork, and I'm going to reset my chart. Now there's still a question here about on this pivot point as well. So now which of those two spike highs should I use? If you follow the strictest rules, it would be the high. So, clearly that's a higher high than this one, but I would suggest, again, based on the action that I'm looking for in a pivot, for a Andrew's pitchfork, it's this pullback. It's the crossbar. Because I know visually that kind of price action is going to be the crossbar of my fork. And so obviously in this case, look at the difference between those two price pivots. That's not bad. That's not a bad fork, actually. That's actually a pretty good fork there for this part of the action. But then when we get to this upper median line, well, that's maybe not so great. Whereas if we use this pivot, I would suggest that that's a more accurate description of price. This fork is more accurately describing the price action in Tesla. And so we can see, this is what Dr. Andrews told us about his methodology, the Andrews pitchfork, is that 80% of the time, price is going to retrace. It's going to reach the median line of the pitchfork. And so we see this, and then he has 5 rules that explain the kind of behavior we can expect at the median line. And so we see here price is bumping along. It's being constrained by resistance at this median line. It finally gathers enough energy to pop above the median line and then goes off to the races to the upside. And so notice, so we get this good descriptive action. The fork is describing that behavior well. And then at the upper median line of the fork, we can see that it's finding the support. Price is clearly finding support at that level, Andrew's pitchfork. And so let me reset my chart again. That's all well and good. So, we've identified a pitchfork that was describing the action quite well back here. But what do we do with the rest of this? Because there's nothing in there that says fork to me. There's no fork to be drawn in there, So any fork you try to draw in there, I submit you're stretching, you're reaching. But one of the things that Tim Morge taught about Andrew's pitchforks is the idea that an accurate pitchfork, a valid pitchfork, identifies a frequency at which price is oscillating. And so, a little bit geeky here for a minute. If you're familiar with an oscilloscope, so it's an electronic measuring instrument. You've seen them in movies or on TV. It's got the little blippy line going across the screen. Looks like an EEG sort of, but it's measuring. One of the things an oscilloscope measures is the frequency of an electrical current. And so if we think of price as basically it's current, it's money flowing through the markets, then the analogy of the oscilloscope becomes more appropriate, and we can think of frequency in price action. And so what I'm suggesting here is that now that we've identified a pitchfork which has valid frequency, it's accurately describing the price action, we can now add median line extensions, because parallel lines which are parallel to the valid pitchfork, will have the same frequency as the pitchfork, and that's the frequency at which price is oscillating. And so let me get rid of these. And so if we look at, now we've added the first two median line extensions, and so we can see right in there, clearly those two median lines identified support and resistance and support. And then got a little bit sloppy here in the next rung there. We make a ladder analogy. We had some overthrows and some undershoot, but basically we can see now that the price action has come back. It's respecting that median line as resistance again, their support, breakthrough. And just for funsies, I had never done this until last night, actually, when I was playing with this chart. Let's just continue with the median line extensions. And so there's the fourth, there's the fifth, number 6, number 7, and number 8. I must have used a different origin last night. I must have done that. So you see there, folks, I adjusted my, and there's nothing wrong with doing that. If you are working with the median line extensions and you see that they're close but maybe not quite, well, maybe revisit the pivots you used. You may find that there is a better pivot or a more valid pivot than the first one you picked. And so that's what I just did there, is I adjusted the origin of this fork. And so now we can see this is what I say that was. That's number 8. So that's the 8th extension of this Andrews pitchfork that we drew. That's March of 20. And here it is 10 months later, and it is still accurately describing the price action in Tesla. And I don't know, folks. Like I said, I've thousands of pitchforks, and I am continually amazed at their accuracy. And this is a prime example. What do you say about that? But let's continue. Volume, again, is not doing anything for us, so let's get rid of it. Again, investors are accumulating this stock. MACD, again, really nothing we can say about MACD, except that it's headed up and energy is elevated. So indicators didn't really help us much here. Let's continue. And so I said that we could do, there were more things we could do on the weekly chart because we have more market structure to work with. And so this is what I'm showing here, is that we have, and again, this is the weekly time frame, we could look at this as a 2 price channel. I'll show you how we got there. And so let's start by going to a clean chart. And so, some people might freak out. Oh my God, well, I just lost my work. I'd suggest that, sometimes start from a clean chart, and you might surprise yourself. You might You might see something new, or you might find clarity. You may find that something on the previous chart was confusing, and a clean chart clears the confusion up. How we got here, and so let me also reset my chart. So if you just come in and you're starting with a clean chart of Tesla, again, it's pogo stick. It's the tree headed to the sky, and what do you do with that as a technical analyst? But if I expand my chart a little bit, I notice that there's a potential trend line. And so just because I don't know what else to do, let me draw that trend line. There's a lot of leeway, a lot of basically personal choice in how you draw a channel, where you draw a trend line. And so I notice what could be a trend line, and we're just playing here. Tim Morge called it Crayon Drawing. So basically, kids with crayons marking on charts. And so anyway, I draw my tentative trend line, and then I make a copy of it, and I move it. I'm looking for a price channel, basically. And so I'm looking for, and again, this is parallel lines. So this is I'm applying the principle of parallel lines again. It just doesn't look like an Andrews pitchfork, but it's the same principle. We're identifying a frequency at which price is oscillating. And so anyway, let's not get geeky here. And so anyway, that looks pretty good as a price channel. We can see, if that's the bottom of the channel, there's the top. And then again, we see once price broke through the top of that channel, it then found support. And so that's something we look for in any support resistance line. We want to see, in an uptrend, we want to see resistance become support. And that's exactly what is happening there. And so, okay, all well and good. Now we've identified that price channel. But again, Tesla's way up here. That doesn't do me any good. All right. So there's a second technique that, again, I learned from Timothy Morge, Professor Timothy Morge, and rest in peace, Timothy. I consider him one of my mentors that truly gained a lot of knowledge from Dr. Morge. And so thank you. And so what I'm doing here, what he called this technique was double the range. And so basically, in his experience looking at charts, and of course, he 40 years of experience with Andrews Pitchfork charting and trading. So double the range, if we look at the idea that when this range price breaks above the first range, it's likely to double. And so we find the double of that channel by drawing a trend line, duplicating it. It gives us an equidistant line there. So now we can see that, price is bumping into what could be the top of that channel. Take it for what it's worth. That's just one of the techniques you can apply when you are unable to find a fork that you like. And so let's continue here. Now we're going to drop down into the daily time frame. We'll take a quick look at the indicators so we can get them off our chart. They're cluttering up the chart. So accumulation distribution, obviously investors are accumulating this stock, or momentum traders are trading this stock. Momentum now has given us a little bit more information. We can see that we reached a peak and now got a MACD sell signal at that point and a sell-off from there. And yet MACD remains in bull mode. So both indicators are above the zero line, which tells us that MACD is in bull mode, which suggests the primary trend is up. And so based on MACD, yes, we're currently on a sell signal, but the primary trend is up. Stochastics doesn't really tell us anything. Volume. I did notice in volume, there's kind of a roll-off or a decline in volume over the last couple of weeks. But then I noticed this is basically, it's a sideways trading range. This action for the last couple of weeks. Just a sideways range, flag, or pennant. And so, which is a corrective pattern. That's the key point. That is a corrective pattern. Corrections can look like pullbacks. A correction can look like that, or it can be just a sideways chop. And so basically that's what I'm suggesting, is that we've got a sideways chop. That's a consolidation or corrective pattern. And it's appropriate for volume to decline. That's what we want to see. In an uptrend during a correction, we want to see volume decline. And so that's what we've got going on here. So that's actually a good thing. I didn't say it while the moving averages were up there. Obviously, very overbought. The moving averages are overbought relative to one another, and price is overbought relative to the moving averages. But that's true of just about any stock you look at this point. So here in the daily, let's expand this recent action so we can focus more on that. The first point I want to make here is that having recognized that this is a sideways range or a pennant, a flag, and drawing those lines, visually indicating that flag pattern, helped me identify the significant pivot points to draw this pitchfork, this Andrews pitchfork. So clearly, this is another spike low, and it's a spike low along horizontal support, what we're guessing is horizontal support. And then we have this spike high, and so, that's another obvious pivot point. This one is not quite as clear, because you might think, oh, well, it's there. But again, having drawn the flag, these horizontal trend lines, I'm more comfortable picking this as the origin of my pitchfork. And so what we have here, we can see that based on Dr. Andrews' principles again, price reached the median line of the fork, zoomed through, and then pulled back, and now we have a retest. And so this is still, I submit, a valid price action in an Andrews pitchfork. Zoom and retest is what it's called in his rules. There's the zoom of the median line. We got the pullback. Now we're going to get the retest, or we're getting the retest. And notice that it's coincident. We've got this horizontal, it's resistance. This is a horizontal resistance level, tentatively, and it's coincident with the median line of our Andrews pitchfork. And so, as I said before, there's a lot of judgment, personal taste involved when you start drawing trend lines and support resistance levels. And I chose to draw this line here and look at this particular candlestick as an overthrow. Because that's, overthrows and undershoots are not uncommon in price charts. And so sometimes, our picture perfect patterns get blown out a little bit because of overthrows and undershoots. And so anyway, I would submit that this is the currently active pitchfork in the daily chart of Tesla, and price is currently testing resistance at its median line. What it does next, well, that's a whole different story. So, and to continue in that direction, what I would do next is drop down to my next time frame, which is the 4-hour. I always drop next down to the 4-hour. And so obviously we get a few more candles to work with, a little bit more detail. First thing I want to look at is, did my pivot points change? And in this case, they did not. So sometimes when you drop down into a lower time frame, the pivots on your fork won't be quite on the right candle, and so you may have to adjust them. In this case, we didn't. And so we can see more clearly here. We got the zoom of the median line, bumped into this resistance level, pull back, and now we're getting the retest of the median line, and we'll see what happens today. And I'm going to leave it with that, folks. Have a fantastic day. I hope you have a super profitable trading day, and I look forward to talking with you again.